Hi and welcome to this Blueberry Market video update with me, John Kibler, head currency analyst. In this video, we're going to take a look at dollar Swiss, and it'll be a nice segue into looking at some Fibonacci on the short side. So I said I'd go through this week. If you don't know how to use Fibonacci, it's simply just measuring the retracement of an impulse leg. So in an uptrend, if the market is making higher highs and higher lows, all you look for is the potential for the fib to act as a potential confluence level with the previous structure highs. So for instance, the 50% isn't an actual fib level, but the 50% of the impulse move lines up with that high there. Or what I typically look for is the market to kind of line up with a 38.2 fib or a 618 fib. So if it looks something like that, then I would expect the likelihood of it to push past the 618 and the 50% to be a little bit higher, because it has that previous breakout high anyway as a supporting point. So it just adds a little bit of confluence to a market. It's not the be all and end all, don't think that it is. It's just one of those where the market sometimes reacts to these levels in line with price. I only ever use it in line with price. So on the short side, again, if the market is forming those lower lows, lower highs, then we take our Fibonacci. This time I inverse my fibs, so I have the 618 coming first rather than the 382. It's just something I do. And I'd go from the swing low up into the swing high and see if there's any fib confluence with that previous structure point. If there isn't, I ignore the fib and walk away from it, but typically what I'd do then is look for shorting opportunities in confluence. Now dollar Swiss leads on to a nice segue into this, because the market has formed a new lower low, so we're expecting the market to come back up into a resistance level to look for a continuation move. Okay, so what I'd do here, because the market is in that retracement phase, I'd go from the swing low up into the swing high of the impulse leg, and then have a look at where my fibs are lining up. So I'll just simply put my tool on there and look left. The 382 is an okay area, not that great. The 50% fibs are a little bit better, and the 618 lines up quite nicely with this structure. So if I just put a line looking left, you can see nice resistance here, support, resistance, support, 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 support. So the 618 area is a nice little area to look at, but obviously I always take into account the previous structure points. So for me on dollar Swiss, what I really want to be looking at is the potential for this area here to act as resistance. Okay, so that's using the fib in line with that. Okay, so I can get rid of that fib now. I know that there's a bit of a confluence in this area. So if I was to look for anything now, I'd look for price to come into this zone, print some bearish price action, and then we can look for the continuation trade off the back of that. Okay, so I hope you enjoyed that little breakdown on dollar Swiss. If you did, then leave a like and subscribe to the channel for more trading content. If you want to see anything else from these trading videos, please comment down below. How can we help you to learn a little bit more? And thanks for watching, and I'll speak to you soon.